Okay, I think it's time for class to start, and we've got 1 minute. So, but I'm already live streaming, and sign in when that sheet of paper comes around, and hopefully other people will show up in a few minutes. But Kelly, you were asking about Thursday. We'll be here Thursday. My meeting don't start until later Thursday, so we'll have normal class Thursday. We will not have a test Thursday. I hope we can be ready for a test by next Tuesday, but we'll see. We got a chapter to cover on cash flow. And, I'd like to push in another chapter. We'll see. Because 15, 16, and 17, that would leave us just 2 chapters or 3 for the exam. And time is flying by. Chapter 15 is the hardest chapter. I don't think you'll have any trouble with 16. I think we finished up 15 on Thursday. We looked at those 3 problems. Quite a few of you handed in those problems. Some people didn't. They didn't need the extra credit. When they make a 40 on the test, they don't need to add anything to it. All right. I hope that extra credit helps all of you. Okay, on cash flow, that is the 4th official statement. All right. And cash flow, it goes along with the balance sheet, income statement, and capital statement. Now, if I had a stockholders report from any corporation, that stockholders report has all 4 statements in it. It has the cash flow statement. But we get our cash from 3 different sources, and we're looking at the indirect method. Now, we got to look at the direct method. I want you to at least say you have seen it. But I believe in finance, Dr. Sneed also looks at the indirect method. And intermediate, for those accounting majors, would have that cash flow again. Managerial, I believe you have it again. So you have it enough times that you will learn it before you're finished, okay? But learning now, it makes it easy later in other classes. So the first source of funds was what? Operating money. Now, operating is your net income, your depreciation, gains or losses, and then the change in your current assets. So, Alexander, if accounts receivable goes from 5,000 to 6,000, is that a plus or a minus?
For cash flow, that will be a minus.
That's right. You tied up another $1,000. So, a plus in a current asset is a minus, isn't it, on your cash flow statement? And Kelly, if your accounts payable went down from 4,000 to 3,000, is that a plus or a minus? Also a minus. A decrease in a current liability is a minus to cash flow because you're paying off your current liability. Okay. All right. Now, why current liabilities? That's all under operating. That's your accounts payable, your accounts receivable, your merchandise inventory, and what have you, your prepaid expenses, and so on. Now, the next part of your balance sheet is fixed assets. And that comes in investing. If you want to relate the balance sheet to the cash flow statement, fixed assets, investing. You're buying land, selling land, buying building, selling building. Now you could have a notes receivable on there where you loan somebody money. That may come under also investing. Now, if you bought other people's stocks and bonds, that comes under investing. Chapter 15, we bought other people's stocks and bonds. All right, now what is the third part of the balance sheet? No, the balance sheet. What's the third part of the balance sheet? Assets is equal to liabilities plus what?
Stockholders' equity.
Right. So what's the third part of the balance sheet, Jessica? Stockholders' equity. All right. Now what's the third part of the cash flow statement? Financing. Financing goes along with the third part of the balance sheet. Buying stock, selling stock, selling bonds, paying a dividend, buying back your own stock, which is treasury stock, and that's the cash flow statement. All right, the indirect method. All right, we looked at a little bit on it on PowerPoints. We have looked at a lot of you are coming in after we sent the assignment sheet around, so I've seen it around 2 or 3 times. Is the other international students going to make it today?
I think Carlos is coming in the farm.
Some of them, how about Millie?
And they're sick. They aren't working.
Millie's sick. She's too mean to be sick. And just find an excuse every class period. I gotta work the job fair. I had a doctor appointment. I'm homesick. Hey, that's 3 classes in a row. Anyway, that's why I don't have to take row. I can remember who was here and who wasn't, and so on. Even though I do take row, but to give you 10 points at the end, I don't have to even look at it. I'll know who missed 1 day, 2 day, or no days, and so forth. Go ahead, Jacob. Carlos, is any of your friends going to make it this morning? Are any of your friends going to make it this morning?
No, after NLRC.
What you got in your ears? Those earbuds? What you got in your ear? Earbud? Earbuds? All right. All right, let's look at chapter 16 again. And let me point out a few things for you. Now, hopefully you read each individual item about dividends and dividends payable and common stock and so forth. Now, the method that you will have on a test is on page 781. That is the indirect method. I told you to number that into 3 sections. 1 for the operating, and 2 for the investing, and 3 for the financing. Now, sometimes you have to find what a decrease or an increase is. For example, well, that is. Right, if you had accounts receivable, let's say you had a beginning balance of 5,000, and you added 15,000 to that, and over here you have 17,000. Now, is that a plus or a minus? You may see these in ledger. What would it be? Plus or minus? Plus. All right. Now, you started off with 5, and you had 15. You paid 17, so that leaves you a balance of what? 3. So you had collected from your accounts receivable. Just say that's a plus or a minus. It's a plus. It's a plus. You got more money from your accounts receivable. Now, you may have that in accounts payable and what have you. But for the time being, then let's look at the direct method real quick on page 782. I want to review that. It's not an appendix. That's why we must look at it. The direct method, the only thing that changes on a statement of cash flow with the direct method is the operating part. The investment's done the same, the financing's done the same. It's the operating part that's different. Just the first section is different. Now, how different is it? Quite a bit. Okay. Now, your biggest items is cash payments for merchandise. You got to figure out cash payments for merchandise and cost of goods sold and so forth. Now, look at page 784. Look down at the example 1617. Cost of merchandise sold was 145. Increase in inventories, 9,000. Increase in accounts payable, 4,000. Cash paid for merchandise, 150. You got to find out how much cash you paid for merchandise. Cost of goods sold was 145. You increased inventories by 9. That's a plus. Increase in accounts payable is a minus. We're borrowing money. So cash paid for merchandise, 150,000. You have to find that. Okay, you got to find out how much interest you paid or cash you paid for income taxes. Now, I want you to look at page 787. Now, this is a cash flow statement by the direct method. Your investing and financing are identical. First off, look down at the investing. Cash from sale of land. Cash used for purchase of land. Cash paid for purchase of building. Net cash flow from investing. That's what it usually is fixed assets. You go down to financing. Cash from the sale of stock. Cash used to retire bonds. Cash used to pay dividends. Net cash flow. So you pretty much have an idea what goes under invested and what goes under financing. Now back up to operating by the direct method. Look at the difference. We take cash received from customers, 1,171,000. Cash received from customers. All right. That's about like an accounts receivable. All right. Let's say you had cash sales. Let's say $100,000. We know that's cash received from customers, right? Then you got to look at your accounts receivable. All right. Let's say that we're starting a new company and we had 30,000 accounts receivable on the books. And then we have a credit to accounts receivable of 25,000. How much cash do we receive from customers there? Oh, more than that. All right. Your company charged 30,000, right? How much of that 30 did they collect? 25,000. That is your credit to accounts receivable. You debit cash and credit accounts receivable. So then our cash from our customers would have been 125,000. So be careful with that on this method. Okay, the second item is cash payments for merchandise. Well, that has to do with two accounts. Merchandise inventory, how much did you buy? And your accounts payable, the difference. You got to take those two and figure out how much cash you paid for merchandise. Again, I want to try to find, that was at the bottom of page 783. I showed you that example at the bottom of page 784. Cash payment for merchandise, the direct method. Take your cost of goods sold, increase or decrease in inventory, increase or decrease in accounts payable to get your cash paid for merchandise. So that's a tricky one. Cash payments for operating expenses, cash payments for interest, cash payments for taxes. Those shouldn't be too hard. And then you've got your cash flow from operating. You'll get the same answer as you do the indirect method. All right, now the appendix I'm not worried about the end of the year spreadsheet, as you see on page 799. Some of you that may help, some of you that may not. We can do these statements without doing a spreadsheet. But if you want to do that spreadsheet, it's just taking your beginning and ending balance and taking your pluses or your minus, which here is debits or credits. But you don't have to do that. All right, so I'm not worried about the appendix in chapter 16. Now we're going to look at a couple of things on the direct method. Now, the direct method started somewhere on page 806 in your exercises. All right, so I want you to try to work exercise 26, 20, no, 20, 14, 20. Take a minute and do that. I'm going to run and get a pen. All right, other people came in late. Who needs to sign in? Says you don't have a book? Oh, you got it. Okay. You got an e-book?
What did you say, which exercise?
Exercise 20. Take a minute and see if you can do that. Just, everybody just jot down an answer. Let's see if you're on the right track.
806. I don't know.
Oh, good overall manager.
Yeah.
That works way up.
Yeah. I decide between that and also.
Good management grade. Morgan's husband will hire you.
No, I don't want to work. He's already in that sure he knows how that goes.
No less money. All right, be working on 21. If you have 20 finished, be working on 21 while I bring up some solutions. Jacob, what answer did you get for the first one? 20?
12,649.
Anybody else match that? 12,649? Don't seem to. Jessica, what'd you get for it? Number 20.
I think that I just got it out on.
Kelly, what'd you get? Number 20. Evan, have you got an answer to 20?
I got 12,007. That's what I thought. I got 7.
All right. Well, we've got some matches there. Okay. Take your cost of merchandise sold, which they gave you, increase the merchandise inventory. Now, had this been a decrease, it would have been a minus. Decrease in accounts payable. All right. That all adds up to 12,700. That's not a minus, is it? That shouldn't be there. All right. But if you had an increase in accounts payable, that would be a minus. Because you're not paying out cash if you got an increase in accounts payable. All right. If you got a decrease in accounts payable, you're paying out more, you're paying that off. If you got an increase in merchandise inventory, you're buying inventory. So this takes care of cash paid for inventory. That's the hardest one, really, under the cash method, direct method. We were going to prepare one of those in class, but we're not going to do one on test. Okay?
And the direct method won't be.
No. No. And test as they go. You don't have a lot of time. I might take this probably Thursday for the class and give you a problem on the indirect method to do in class to turn in, which will be part of your next test. Okay.
That's gonna be this Thursday?
Yeah. You don't have a ball game, do you?
No, but you're saying part of our test is this Thursday.
Well, a cash flow statement, indirect method.
Okay.
Cash flow statement, indirect method. We're going to practice that before the period's over. Okay. All right, now I want you to look at number 21 also. Determine selected accounts for cash flow from operating activities. You've got accrued expenses payable, 12,650, and that was the end balance, and your beginning balance was 14. Is that going to be a plus or a minus on your accrued expenses? Accrued expenses could be anything, taxes. It looks like we paid some off, so it'd be a minus. Okay, how about accounts payable? Beginning balance, ending balance. What do you think that would be? Plus or minus? All right. First off, they're doing the cost of merchandise sold. Was that given to you at all? It was given. Okay, I didn't see it. It was given. So a decrease in accounts payable. Now that's a plus to this part. It's an overall minus to your cash flow statement, as you'll see, but it's a plus here because you paid more on your accounts payable. And the decrease in inventory, you sold inventory you already had, you didn't have to pay cash out for it. So that is a minus. So your cash payments for merchandise are $1,025,000. Now your other operating expenses, what did they get to 179 for? Was that given?
Yeah.
All right, that was also given. I had not looked at that either. And decrease in accrued expenses. All right, that's a plus because you're paying out cash for it. So cash payments for operating expenses, 180,000. You got to think a little backwards on some of these things. I don't know why the computations on A It has to be, don't it? Okay. This is cash flow from operating activities, and it looks like you have an income statement, change in balance of selected balance sheet accounts. Now, this also is doing cash flow from operating activities, cash received from customers, cash payment for merchandise, as we did here. All right, cash payments for operating, cash payments for taxes, net flow from operating activities. Okay, that is the biggest difference on a direct method, is this operating part. A cash received from customers, I don't know how they set that up. Does it say this is cash sales 511? How does it? Yeah, that's cash sales 511. All right, a decrease in accounts receivable means more people paid you, so that's a plus. So we received 522 cash. Here we are again. Cost of merchandise sold, increase in inventory, a plus. Decrease in accounts payable, a plus. And we didn't have to worry about depreciation expense. Operating expense other than depreciation, decrease in prepaid. All right, if you got prepaid expenses on your book, you paid cash out for them a year or two or some time ago. So a decrease in a prepaid item, paid no money out for it. It's like depreciation. Increase accrued accounts payable, and then cash payments for operating expenses. And then income taxes, and then a decrease in tax payable and cash payment for income taxes. Okay, direct method. I don't think Dr. Sneed pushes that one too hard either, but it's not hard. Not what I'm avoiding, it's not hard. It's just the indirect method we use more. Okay, there was I want you to look back at number 18. Go look back at exercise 18. All right, take 2 minutes and look over that, exercise 18, and list at least 2 or 3 errors. If you were doing a cash flow statement, what's wrong with this? Okay, William, did you find a mistake?
First thing I found was, I believe the total net cash flows used for investing activities is wrong.
All right. Alexandra Fanning, did you find a mistake?
Yeah, the increase in accounts receivable should be a minus.
Okay. Faith, did you find a mistake?
Depreciation be minus.
We'll look at it. Morgan, did you find a mistake? All right. Let's go back and see. This is number 18, right? All right, I was trying to find the listing. Yeah. Okay, they're saying that number 6, and let's see if you mentioned some of these. The increase in accounts receivable should be deducted from operating activities. Now, I think Morgan and somebody else mentioned that one. Okay. So, 2 people mentioned that one. Now, the gain on the sale of investment should be deducted from net income, not added. Did I get that one? It should be minus. All right. The increase in accounts payable should be added to net income. The cash flow from operating. The increase in accounts payable should be added to net income. I have that one listed. Because you're borrowing money, aren't you? You're borrowing somebody else's money. All right, the correct amount of cash at the beginning of the year is $240,000. Should be added to the increase in cash at the main bottom, what I call the 4th section. The final amount should be the amount of cash at the end of the year, and the final amount of net cash flow from operating is $381,360. Now, if you were doing a corrected cash flow statement, it would look like this. All right? Depreciation added, gain subtracted, increase in accounts receivable subtracted, you're tying up money, increase in inventory, you're tying up money, increase in accounts payable, somebody's loaning you money, decrease in accrued expenses, you're paying out, cash for sale of investments, cash used to purchase land, cash used to purchase equipment. All right, so you have 381 and 451. And then you sold common stock, you paid dividends, and you had your increase in cash that gave you cash at the beginning of the year. You had them, I guess that gave you cash at the end of the year. Okay? All right, so that's what you will have Thursday. I'll just give you one in class.
Appreciation added.
All right, depreciation, depletion, amortization. Now, when we make an entry for salaries, we may debit salary expenses and credit cash, right? We may debit utility expense and credit cash. But what do we debit depreciation expense? What do we credit? What? Now, what do y'all got? Debit depreciation expense and credit what? Accumulated depreciation. Was cash mentioned? There is no cash payout for depreciation expense, even though we took it out of net income. All right? Let's say the only expense you have is depreciation, Morgan. And We're doing an income statement. Okay? Let's say your net income was 200,000. Well, you look back at your books and the expenses you took out was 10,000 for depreciation. Your net income of 200. But how much cash? If everything was cash, say, they have 210,000 cash. You'd have the 200 cash sales, and you'd add back the 10,000 you did not pay off depreciation, make 210. So cash flow in some circles is just net income plus depreciation expense. That's a short definition of cash flow. But then we got to look at all these other habits. Increase in accounts payable, accounts receivable, and so forth. All right. Now I gave you assignments from this chapter today. And Kelly, what were those problems I gave you for today? One what?
1A and 2A.
All right, now those assignments are still good for Thursday. We might get over 1A today, I don't know. Uh, 1A and 2A for Thursday, I'm going to add on to that 4A, the direct method. I think I'll add on 3A. So for Thursday's assignment, just 3A and 4A. We're going to look at a lot of these different problems. So now we're going to go ahead and look at number 1. I know some of you don't have this. Some of you, I think, when you started college, you swore an oath, and I may have told you this before. You swore an oath that you would not do homework, and you're sticking to it. Okay. All right. Now, how about attendance? Alexander hasn't missed a day, have you? So, what? There's not one, and he's a baseball player. Okay. Now, you tennis players, if you have to be out of town for tennis, I don't count that as an absence, or baseball, or golf, or basketball. Since it's school business, I don't count it as an absence. Okay. Now, is anybody else, like Alexander up here, not missed a day? Okay. 3 people?
I watched the engagement, I watched the live stream whenever I missed. When I think after
Do you text?
yes, I text you.
As long as you text, if I got your text on my phone, I count that as being present.
Yeah, I
I
sent you
don't
on
have
Google everything.
Huh?
I said, I don't have your number.
If everybody, I don't know why I didn't give you, I didn't like it. Okay.
Because I just started this semester.
I know. But I'll give you that number. But attendance is important. When I was in 6th grade through 12th grade, I missed 2 days a year. I lived on a small farm, we were poor, and I had to miss 1 day of the springtime to plant potatoes. And I had to miss 1 day in the fall to dig those potatoes, because we had a lot of potatoes planted, lasted through the winter. Okay? 7.5 years of college, I missed 1 night class. And that's because I was in the hospital with a bleeding ulcer. 1 night class. I was more lucky than some of you all. Some of you who had to miss. And some of you find a reason to miss. You schedule your doctor appointment during the county, or your dentist appointment during the county. We don't have any other time you can schedule that appointment. Stuff like that, you know. Anyhow, it's up to you about attendance, okay? There are a few students that can make an A in the class without being in the class or in spite of the instructor, no matter how good or how bad the instructor was. But there's a lot of students that need to be in class time. Okay? Some don't have to have it, some do. Yesterday we were interviewing 3 people. I was at home, but we did a conference interview and it worked out great. We interviewed 3 more candidates for the entrepreneur. Cool. And anyway, one of the candidates was international. Now, you know, I don't knock international students. I like them. But this one guy we interviewed, his communication was worse than Carlos's. That was pretty bad. Right, Carlos? But then Carlos gets by. Okay. Anyhow.
Was it worse than Eva's?
The what?
Was it worse than Eva's?
Now, he was pretty bad. Oh, yeah, he was worse than Eva. And I told the committee, after this guy hung up, and we had Mr. Hunter and Michelle and Mr. Rogan and several engineers, I told them, when this fellow hung up, if I were in that fellow's face, I would walk at him. It was a lot of, you know, just, he had trouble communicating no matter what. He had trouble with the language, but he had trouble using what language he knew. But now, if I had to, I can understand Carlos. If I had to. If I need to real bad, I can understand him. Carlos, how many languages do you speak? 5? Okay. He does good then with English if he knows 4 other languages. Okay. And how about you?
Language is about my business. I know Serbian, English, and
Serbia, English, and German. Now, in Serbia, is it akin to some other language in the country near you? Was it akin to Yugoslavia?
yeah, I mean, they're all similar languages, like Croatian, Slovenia, they're all like similar languages. It's a pretty small difference.
I had to China one time, and she said some of the people, they have so many different dialects, but some of the people in the city, their dialect is really different than the Chinese in the country. They have a hard time communicating with one another. So, all right, we just have accents, don't we? We have a northern accent. It starts at Roanoke. It goes up to DC on around the northern state. And we have our southern accent. Okay? And we have our slang. Okay? You know, little bit differences in language. I was from Buchanan County. We pronounce it Buchanan County. Some people upstate pronounce it Buchanan. I had to go to Stanton, Virginia. People up there pronounce it Staunton, Virginia. I live near Richland, Virginia. Some people call it Richlands. You know, just a little bit difference in how you pronounce that. All right, now you know your new assignment. We're going to go back and we're going to look at problem 1A on page 808. Now, I do advise you to try to practice your homework before Thursday, especially problem 2, because you're going to have the indirect method Thursday, okay? Now, problem 1, so you can set this up in a spreadsheet, but I see no need to do that. Now, problem 1, they had to give you net income, didn't they? Where is your net income in problem 1? It was a what?
It says there was a credit of $500,000.
All right, we know in a partnership or proprietorship, we debit income summary and we credit capital that increased it. Now, this book didn't use income summary too much. It would just credit your expenses and debit your revenue, and the difference went in capital. A gain was a plus, a loss was a minus. Now, retained earnings is your capital. If it increased 500,000, we must have made 500,000. But now, if it increased 500,000 and you paid out 200,000 in dividends, then you have to realize that you add those two together to get, your real net income. So, Kelly, you're saying net income is 500,000, right? Okay.
But you also have debit.
Oh, you do have a debit. All right. Did they mention that one? There was a 90,000 debit to retained earnings for cash in. So, but still, your net income was how much? 500,000. Okay. Now, they say what depreciation was, or do you have to figure it out? All right. At the beginning of the year, it was 500,000. At the end of the year, it's 600,000. So we must have debit depreciation expense for how much? 100. So we add 100. That gets our cash flow statement started. 500 plus 100. Then we analyze our current assets and liabilities. Accounts receivable went up by 50,000. William, was that a plus or a minus?
Minus.
All right, let me find this cash flow statement. If you have time, please work all the exercises if you have time. All right, I revealed one there that I didn't mean to, but 500 plus 100, gain on sale and investment, 75,000 wheat minus. Kelly, do you remember why I said that was a minus? Yeah. You take it into account. If you get 100,000 from land, that's cash flow, right? And we're already counting as 12 because that gain was in that 100,000. All right, but we're counting it up here too. It's in there somewhere in net income. But we're counting it twice. We've got to take it out once. Now the next one should be what William told us. Is that what you told us, William? All right. William told us there was a increase in accounts receivable. Is a minus. We're actually loaning money out. People owe you for accounts receivable. Jessica, how about the next one? Inventories, what happens?
It goes up.
How much?
It goes up by 20,000. So
Plus minus. All right, it's a minus. Okay, going on down through there. I'm not going to do anything with investments in land equipment. I'm going to go down to accounts payable. Jacob, how about that one?
Increase 40,000, so you add 40,000.
You add 40,000, right? You're borrowing somebody's money. Accrued expenses, how about that one? Alexander Fanning?
Down 5,000, so minus.
That'd be a minus. All right. Now let's look at, now dividends payable. I want you to look at how we handle that. Dividends payable, 25 to 30. How would you handle that one, Alexander, up front?
What are you talking about?
Dividends payable. Is that a current liability? Dividends payable?
Are you talking about PR 16-1A?
Yeah.
So are we on the financing?
Now, what'd you do if the dividends payable?
Last cash paid for dividends. That was 90,000.
Okay. All right, we'll get down to that in a minute. All right, now here are the current liabilities and assets I want you to look at. William is correct. Jessica is correct. Guess that was Alexander is correct. Accrued expenses, I guess I asked that for Jacob. Anyway, 490,000. No matter what method you use, direct or indirect, it has to be 490,000. I hope we got a problem that we have to use both methods on it. Prove to you, you get 490,000. All right, McKinley, we move down to the investing part. Under investment part, do you see anything there that we add or subtract under investments? You can look at fixed assets, equipment, or land, and you can read the numbers here. The investments were sold for, equipment and land were acquired for. There was no sale of assets. Do you see anything there that's going to affect investment? How about you, Miss Serbia? Morgan? Which one you talking about, land, building, or what? When I look at your fixed assets, everybody.
Oh, I got it.
What have you got, Jacob?
You do cash from sale of investments are 175,000. Then you do purchase of land for 500,000. You do purchase of equipment for 200,000. Negative.
All right, now, how do you find out the purchase of land? It went from 0 to 500, so we must have paid out 500. It didn't say we got it on a mortgage. Now, if we got that land on a mortgage, it has nothing to do with cash. All right, and Jacob also looked at equipment. It was $1.2 million, and it went up to $1.4 million. We must have bought some more equipment. And then he looked at line A. The investments were sold for. All right. That's the three items. Investment. Since they called it investments, we had to put it under investing activities. Investments could have been securities we bought, like Chapter 15, bonds till they mature, or trading equities or available for sale equities. Those were investments in Chapter 15. All right, so we got the second section. Plus 175 minus 5 minus 2. Now, so far, if we just looked at that, we're using up cash, aren't we? We got 490 and spent 525. We're down $35,000 unless we make it up under financing. And Margot, all right, what is the first thing you did under financing? All right. Well, I would look at common stock. We had 600. Now we've got 700. So something must have happened. We made 100 there, didn't we? Well, how about paid in capital? We had 175. Now we got 200. So we must have sold that stock at a premium of 25,000. So your little neighbor there, Kelly. What do we have from the sale of stock, Kelly? 125,000. Is there anything else? Say, Chris, is there anything else under finance? For anybody?
Cash or dividends?
All right. Now pay attention to that dividends. When I was talking to Alexander about it, sure, it says we authorized 90. But when we went up there and looked at our dividends payable, it went up 5,000 from last year. So we still owe 5,000 of that 90, right? We paid off 25 that we had, plus 5 more that we owe for. We haven't paid 5,000 of that 90. But now I know you got it right here, didn't you, Alexander? Did you get the 85? Okay. All right, so we got 40,000. So our increase in cash flow was 5. Add that to the beginning of 150, and you get 155. Now, once again, go up and look at cash in problem 1. How much was your last year's cash? 150. How much is this year's cash? 155. What is the difference? That is your answer, isn't it? Now, on a test, I'll be looking for that answer. We can plug that in. So I'll be looking for individual activities here that give you the 5,000. Okay? All right, that is cash flow, the indirect method. Okay? All right, now I'm going to give you a preview of chapter 17. We will finish 16 on Thursday. 17, first page I want you to look at is page 848. These are ratios, working capital, current ratio. Now we've done these one at a time in every chapter. But now we got them all at a time. Now, Evan, have you already had all these ratios in finance? You'll have them again, maybe in managerial. If you major in accounting, you'd have an intermediate. Okay. But now, folks, some of you need to look at what you're majoring in. Is there jobs available? And I support all areas. I've taught in all areas. I was certified to teach marketing. At community college, I had to teach everything except shorthand that we had at one time. Shorthand went out of business. Okay. But whatever your interest is, everybody shouldn't major in accounting. Everybody shouldn't major in marketing. Just whatever your interest is. But now I feel like there's a couple of 3 of you, you're majoring in the easiest program. You want it easy. You just want a degree. You want a piece of paper. You don't want nothing hard. All right. But anyway, just major in something you'll get a job in. Now, here's the best thing about this page. On 848, you can use it on the test. As long as you don't tear it out of your book. You cannot use your book, so that means you need to make a copy, right? Now you make your own copy. If you forget your copy, you don't have one. I'm not going to let you borrow anybody else, and I'm not going to make them for you. Everybody gets to make their own copy of those ratios for a test. Now, if you got the formula on these ratios, you can work them out. You can work them. All right. So we will be able to finish chapter. We'll be able to finish chapter 16 on Thursday. And we'll be able to finish chapter 15 in maybe one day, no more than two. Because we've had these in every chapter. All right. So let's go back and look at a couple of ratios. The first two things has nothing to do with ratios. They're called horizontal analysis and vertical analysis. All right, now which way is horizontal? That way. And vertical? That way. All right. So horizontal analysis in accounting, we compare last year to this year. As you see on page 827. Last year to this year. Now, sometimes we can look at percents, increase and decreases. Now, I can take numbers and make them work to my favor every time. Okay? Have any of you had statistics? I taught statistics one time. Actually, it's a course that scared me to death in college, but I got an A out of it. I learned it well enough to teach it. But the book I used to teach it from, first page, the author put on it. There are lies, there's damn lies, there's statistics. Statistics can be worse than a damn lie. Make sense? These politicians, they take statistics and swerve them to their favor. All right? Another politician may take the same set of facts and swerve it to his favor. All right, horizontal analysis. All right, you can do that on an income statement and what have you. And you can do it on a balance sheet. And you can do it on retained earnings. All right, now look at page 829. Bottom of the page. That's vertical analysis. What do we mean about vertical analysis? We're comparing something to a total. Now, this will be just a little bit of your homework. Those ratios is what I want you to get from this chapter. I want you to have heard about horizontal and vertical analysis. All right, a vertical analysis, you can take the total assets and divide every asset into it and turn those assets into percentages. Then you do the same thing with the other side of the equation, liabilities plus equity. And you turn those into percentages. And those in some books are called trend analysis. And then we start the ratios, liquidity. Now on page 832, 3 liquidity ratios, working capital. You've seen that before. Do you remember what working capital was? I even told you that story about that fellow from England coming over to buy that ranch in California. You remember that story? You know? What? Working capital, sometimes we call it WC. I know you've heard of this. WC is a WC in Serbia a water closet? Is, and a water closet is a toilet. Okay, this difference in language. Capital in accounting is investment. Capital in economics is machinery. Quick, capital investment. All right, WC in accounting is working capital, and you subtract current assets minus current liabilities. So look at page 832, and what would your working capital be for 2000Y6? It's 340,000, isn't it? Now the story I told you, this rancher in California had a ranch for sale. And this fellow from England came and toured the property. And at that time, we had fax gold. We didn't have cell phones. We had fax machines. Fax machine story. I was teaching small business management class, and I had students in my class, and some of them were from Cornhole, Virginia, and we were faxing students in Mousehole, England. Okay? To exchange small business ideas. Okay? So anyway, so this Ranger owner buyer went back to England and he wrote the Ranger, faxed him in California. How many WCs do you have on the property? I told you that, didn't I?
I feel like I do recall you saying something.
But anyway, the former ranger in California didn't know what a WC was. He didn't know it was a water closet. So he wrote back to the fellow in England, we have one, it seats 600 people. It's 5 miles down the road. My daughter got married in our WC last spring. Once a month, we go down to our WC and have a picnic. The WC to the former was Wayside Chapel. The water closet, Wayside Chapel, working camp. Okay. I'll see you all Thursday.